Hey everyone, Coach Investor back to another video for today. So in today's video, let's talk about Salesforce. Salesforce had an exceptional week this week because, well, they reported earnings and it basically blew all the expectations out of the water. Now, Salesforce, again, is the great example of when we're near a bottom, usually the noise is the loudest. What did we have? So we have articles, and of course, this is justified criticism that the company laid off 8,000 employees while paying Matthew McConaughey, or rather, right, $10 million a year to sit around. Then, of course, we have activists that surround the company like sharks. So Dan Loeb, hedge fund Third Point, has built a position in Salesforce. 2 weeks prior, we had Value Add Capital CEO Mason Morfitt said that it will join the board in March. And then Elliott Management and Starboard Value has also disclosed position in recent months. I think by now, there are around 5 activists that have taken a position or are interested in Salesforce. We obviously talked about the layoffs, cost cuts, and then executives leaving the company. Now, if you want a small reminder of how I concluded my last video, I'm sure it's a wonderful company, but things have to change very, very quickly for the market to have the confidence that, well, they can reach those fiscal year 2026 goals. Of course, right now we have so much noise surrounding the company, layoffs, executives leaving, growth is slowing down, etc. But if they can show the market, if they can execute nicely in 2023, then the market will probably believe that those goals are achievable and eventually the stock will do its thing. Of course, I continue here for a couple of extra seconds, but this is exactly how the stock market works, right? For a while, there is noise, then there is more noise, stock goes down, more news articles come out, more doomsday headlines, so the stock goes down even more. Deep down, the company, of course, had to improve its profitability. We're going to have a look at how many times they mentioned the word profitability in the earnings call. Little spoiler here, it's more than 10. Now, a couple of extra things they mentioned during the earnings call, the street obviously loved, and it's all related to profitability, but also growth of the company. Now we'll discuss more of it throughout this video. If you enjoy these type of videos, leave it a thumbs up, subscribe if you have not, it really helps out the channel. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So obviously we'll have to talk about the numbers here. Growth has been pretty nice for this quarter, over 10%, more specifically 14% year over year, or 17% on a constant currency basis. But I highlighted here the buybacks. So they returned $2.3 billion in the fourth quarter and $4 billion in fiscal year 23 to shareholders in a form of share repurchases. But there is more. They also announced a share repurchase program that has increased to $20 billion. Now, of course, when they do share buybacks, what's the point? Basically, reduce the overall share count of the company. So what actually happens? Well, as you can see down here, shares outstanding, it is now actually the first time that the overall shares have actually decreased. For years and years, of course, there was here the acquisition of Slack, they also acquired Tableau, etc., and other companies as well. Share count has increased all the time. Right now, it has actually decreased. Now, how can this be? Well, they can buy back shares, but since stock-based compensation keeps on increasing, usually what happens is a type of break even, but in this case, it just kept on going up. So yes, you're getting diluted, but thanks to the share buyback, you're getting diluted a bit less. But now for the first time, you're actually gaining more value. Your shares are worth a bit more right now. This obviously is a big positive. Overall, as you can see, revenue for this company, again, it's a tremendous software company. Revenue has been growing each and every year. When it comes to free cash flow in the last 12 months, $6.31 billion, I believe. Actually, if we're going to look at the recent reports, actually 7.1 or $7.21 billion. Return on equity in the last 12 months is basically flat. Gross profit margin, 73.3%. Of course, it's not the cheapest company around, 26.1 forward PE, so not the cheapest. And so they say here for the full year, we delivered $31.4 billion in revenue. That's up 18% year over year, or 22% in a constant currency basis. One of the best performance of any enterprise software company their size. They closed fiscal year 23. Again, for those that don't know, some companies are well, going with the normal calendar. Other companies are already 1 year ahead. Well, 1 year ahead when it comes to their financial statements, or their quarters are a step ahead of the normal yearly calendar. So they say here they closed fiscal year 2023 with operating cash flow reaching $7.1 billion. That's up 19% year over year, the highest cash flow in the company's history and one of the highest cash flows of any enterprise software company their size. Of course, they do, well, put the dot on the I, let's say here in this report and in the earnings report, basically indirectly talking also to activist investors saying, look, this company is already doing pretty well, all things considered, especially if you compare that company to other software company, to other enterprise software companies. Throughout the earnings call, they actually, well, certainly the CEO really makes a point of he's the leader, he knows how to manage that business. And here again, you can pretty much see this in the language that they use. They continue by saying our relentless focus on execution and proactive management of the current environment allowed us to close out a strong quarter and set us for a transformational fiscal year 24. It's a new day at Salesforce, and as we look ahead, I am excited for the opportunity in front of us as we continue to drive profitable growth. Of course, we talked about profitability. So how many times did they mention profitability in the earnings call? So in the earnings call, they mentioned profitability 14 times. Of course, the focus here is on profitability, right? We've seen revenue growth throughout the years has been fine. Of course, there has been some slowdowns, but overall revenue growth was there. What wasn't there was profitability. So obviously talking about profitability 14 times during the earnings call makes some sense. And of course, in the age of AI, they obviously had to talk about their own AI, their own GPT, which is called Einstein GPT. So they said that will be integrated into all of their clouds, as well as Tableau, MuleSoft, and Slack. And it is another way we're opening the door to use AI for our future and for all of our customers. And then what did the market like the most? Well, basically these two segments right here. So first, the acceleration of the profitability framework in fiscal year 24. I'm very pleased to announce that we now expect to achieve non-GAAP operating margin of at least 30% in Q1 of fiscal year 25. And I want to emphasize that 30% represents a milestone, not a destination. We are not putting a ceiling on our margin aspirations. We are thrilled that we are exceeding our fiscal year 2026 profitability goals years in advance. Again, this was very, very much well received by the market. Now, although they mentioned that, they are not reiterating their fiscal year 2026 revenue target of $50 billion due to the uncertainty in the market. Now, they continue by saying here, of course, we know they acquired Slack, Tableau, MuleSoft. So they're a company that have made a couple of acquisitions throughout the year. Of course, costly ones as well. We've heard some rumors that Slack is not integrating that well, but as you will see in a second, all segments of their business are growing. Now, they did say here that the board has decided to disband their M&A committee. So right now, don't expect any new mergers and acquisitions from Salesforce until further notice, which again was well received by the market. And last thing I want to touch on with regards to the earnings call, which is something that the CEO talked about on Yahoo Finance as well, and that's that they hit the hyperspace button. So we hit the hyperspace button and we said we can hit this target now. We don't have to wait 2 years. That's when they set their goals. And that's where I'm putting my time, my energy, my effort. And I'm proud of the team for delivering this Q4 operating margin of 29.2%, because that really has become like our North Star. Again, it's great. It's great that they show the market, look, this is how profitable we can be right now. We can even become more profitable in the future. We can still continue to grow double digits. But to me, it's all right. Can you show me that you can continue to operate like this? I think this is a question a lot of investors have as well. Of course, some people might take a victory lap right now because it has not been that easy to be a Salesforce shareholder. So yes, pop your champagne bottle, because this has been actually a very, very good quarter. But will the next one be good as well? Will the one after that be good as well? That remains to be seen. And now when it comes to the various segments of their business, so this is for the fiscal year 2023, so subscription and support revenue. You can clearly see sales is up 14% or 19% on a currency basis year over year. Service, same thing basically, Platform and other, including Slack, 32% growth year over year or 36% on a constant currency basis. Marketing and commerce, 16% up or 21%. And then this is Tableau, so the data, 15 to 16% growth year over year. So all their segments here are growing quite nicely. Now, when it comes to cost cuts, if we go here and we look at operating expenses year over year, you might say for this quarter, well, it has not decreased much. How is that possible? For the full year, of course, it has not decreased as well, but we know that in the back half of the year, some costs have been made. And that's why you can see this segment right here, restructuring. If you remove that, yes, for this quarter, operating expenses is actually down. Now, what does restructuring entail? Well, if we scroll down right here, we can see in January 2023, the company announced a restructuring plan, the plan, intended to reduce operating costs, improve operating margins, and continue advancing its ongoing commitment to profitable growth. The plan includes a reduction of the company's workforce and select real estate exits and office space reductions within certain markets. So of course, this is something that had to be done. Now, if you remove that because you want to see how the actual business is doing, you can see that for this quarter, year over year, we're actually down. The only aspect that is not down significantly, let's say, is marketing and sales. And that's because, well, they think that this segment should continue to be as strong as possible. The other ones have been reduced, not that much, but for them, for Salesforce to continue to grow, marketing and sales is pretty important. And so to conclude, again, a great quarter by the company. If you're one of the shareholders, do share your thoughts down in the comments below, but also your expectations for the coming one. Of course, you might be happy right now, but will you be happy if the next quarter is not as great? Let me know down in the comments below. Overall, right now, good execution. Of course, these activists are still lurking around and seeing what might happen. I expect more news to come out with regards to activists and with Salesforce probably in the coming months or so, but be sure to mention your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.